If you're a law firm owner and you look at your financial statements and instead of clarity, you're left with more questions than answers, you're not alone. You know and see how much revenue came in, but you don't actually know which revenue streams contributed to that total number. And when you look at your expenses, it's not really clear what was an expense versus an investment. That frustration is one of the biggest pain points law firm owners feel when it comes to their chart of accounts. So, today I want to break down what a chart of accounts actually is, why most law firm chart of accounts are ineffective, and how bad chart of accounts quietly leads to bad decisions. So, if your financials feel confusing or unhelpful, you're in the right place. I'm Chelsea with Core Solutions Group, and for over a decade, I've helped law firm owners get clarity around their numbers. Not just so that they're accurate, but so that they actually help you make better decisions. And one of the most common issues we see, even in firms doing really well on paper, is their chart of accounts. And they don't actually tell the story of the business. Let's start with what even are your chart of accounts? Your chart of accounts are how you describe your money made, money spent, and on your balance sheet, your assets, your liabilities, your equity. So it's how are you describing and grouping your income, your expenses, and the accounts on the balance sheet. So when you look at your income statement and you see all of those line items, those descriptions, each of those lines makes up your chart of accounts. It's how you're describing things that are accounted for in your finances. So let's start with revenue. For law firms, revenue clarity usually looks like matter level revenue categories. So if you look at your income statement and you only see total revenue that you made, and you have no idea which types of matters are actually contributing more or less to that revenue, you're missing some clarity. And it makes it very difficult to decide what work you should focus on, what's actually profitable, because just the fact that one matter type contributes the most revenue to your firm does not mean it's contributing the most profit to your firm. Without that visibility, you're guessing. Next, expenses versus investments. Expenses should make it very easy to see where your money went, what your overhead is, meaning expenses that happen whether revenue goes up or down, and whether something looks off. For example, it's very easy when you have a detailed chart of accounts to see from a financial report fraud or an accidental double payment. These things happen. Or maybe it's a mistake that just really shouldn't have happened. You give yourself more of an opportunity to catch it. And you should be able to spot those things pretty quickly. Investments are different. Your chart of accounts make it very easy to tie investments back to internal metrics and KPIs, which we'll talk about in a future video. Because investments should have an ROI. There are two primary investments in a law firm. The first is marketing. You should be able to clearly see where your marketing dollars are going so that you can easily compare that spending to your internal marketing metrics. That allows you to evaluate what's actually working, what needs to be adjusted, and where dollars that are ineffective could or should be reallocated. And the second investment is your team. Now, this one is critical for law firms. Your chart of accounts should separate billable team members and non-billable team members. If you only see one wage expense line, you have no idea how much you're spending on billable labor versus support or administrative labor. And that's a problem. One common benchmark in the legal industry is that billable team members should generate 4 to 5 times ROI. You should be able to look at your income statement and say, this is what I spent on billable team members, and this is the revenue they generated. If that ratio is off, that's a signal to dig deeper into things like utilization rates and realization rates and looking at individual profitability of the billable team members that you have. Now, we'll cover more on that in the KPI video later in this series. Now, let's talk about trust accounts. Trust funds should not show up as firm money on your balance sheet. Technically, they're not supposed to show up anywhere on your financial statements because they don't belong to the firm until they're earned, invoiced, and paid. What I like to see is a trust bank account and a corresponding trust liability grouped together so that you see that subtotal that should net zero. That grouping tells us that the two parts of the three-way trust reconciliations are handled inside the books, leaving that matter level reconciliation to be done outside of the accounting software. This is also why I prefer that firms do not track client level trust balances inside of their accounting system. One big red flag that I want to point out, anything labeled miscellaneous or general in your chart of accounts, that's a problem. Everything should have a specific home. Miscellaneous categories are where cash quietly leaks because they're used for convenience instead of clarity. Now, another red flag is structure. If you look at your income statement and see one long running list of expenses, no groupings, no subtotals, that's hard to follow and hard to use. Groups, subcategories, and subtotals allow you to chunk expenses, spot patterns, and still keep useful detail. For example, we talked about two investment categories in your chart of accounts on your income statement, marketing and team. If you have one line item that says marketing and advertising and you don't have sub-accounts to say this much went towards paid efforts, this much went towards SEO, this much went towards our contractor or our website expenses, you can't see right away where your marketing dollars went and how much went to each type of marketing you're investing in, and that subtotal that tells you how much in total all of those equal. And with your team, you want groups that show billable and non-billable plus the subtotal. That can only happen when we utilize groups and sub-accounts in the chart of accounts. On the balance sheet, the same ideas apply. Up at the top, you'll see firm bank accounts, which should be grouped separately from trust funds so you can see the subtotal of firm cash versus client trust funds. Credit cards in your liabilities should be grouped separately from long-term loans so that you know what your short-term obligations are versus your long-term liabilities and obligations are. And in equity, at the very bottom, I strongly prefer separating your owner draws or distributions by current year and previous years. So you can clearly see how much you've taken home this year, not cumulatively over the life of your firm, because that's what that total usually represents. So doing it this way allows you to see what you have taken home this year specifically, and then the total of all prior years separate. That clarity matters. If your chart of accounts isn't built for clarity, every decision you make will feel harder and heavier than it needs to be. So let's talk about what to actually do next. First, you don't need to rebuild everything from scratch on your own. We've created a law firm specific chart of accounts template designed to support decision making, not just bookkeeping. It gives you a clear starting point that separates expenses from investments, breaks out marketing and team correctly, and structures your financials so they actually answer questions. Second, if you already have a bookkeeper, this is an important conversation to have with them. You can literally say, I want to refine my chart of accounts so it helps me make better business decisions, not just accurate reports. That framing matters. And if you don't have a bookkeeper or you're not confident they specialize in law firm accounting, you can always reach out to us for help. This foundational work is exactly what we do with law firm owners. In the next video, we're going to talk about KPIs because once your chart of accounts is structured correctly, you can finally measure your investments that are actually paying off. So to get started, download our law firm chart of accounts template. It'll help you see exactly what your financials should be showing you.